Very good afternoon to all of you. On behalf of Auditing and Assurance Standard Board of Institute of Chartered Accountants of India, I welcome you all in today's 129th CP program organized by AASB of ICI this year. Today, again, the topic is very relevant and very important for the audit, that is audit documentation and written representation. So it's very relevant that SA 230 and SA 580. And in order to tackle this very important topic and both the standards, we are having with us our very learned speaker from our Chartered Accountant fraternity, CA Pranav Jain ji. So on behalf of AASB of ICI, I extend my warm welcome to you, Pranav ji, on this
Thank you.
129th CP program organized by AASB of ICI. Welcome to you, sir.
Thank you.
I also I also welcome all the participants of today's webinar. As we are aware that Pranav ji is the fellow member of ICI. So before we formally start, I would like to share with you the brief profile of our today's learned speaker, CA Pranav Jain ji. Pranav Jain ji is a fellow member of ICI in practice with last 22 years and with more than 22 years of experience in audit and assurance, both in India and abroad. He has completed certificate course of Institute of Chartered Accountant of India on IFRS and Forensic Accounting and Fraud Detection. He is presently practice head of Audit and Assurance Services of BGJC and Associates LLP Chartered Accountants with offices in Delhi, Mumbai, and Udaipur. He has authored a book, Audit of Financial Statements, which has been published by Taxman. He is a regular speaker at various forums, including programs organized by Institute of Chartered Accountant of India, PhD Chamber of Commerce, and other study circles at the various platforms of ICI. He has also given a presentation on international standards on auditing and international standards on auditing at webinar organized by the Institute of Chartered Accountants of Baroda. He is empaneled at technical reviewer with the quality review board set up by the Government of India. He is specially invited to the Auditing and Assurance Standard Board and also Accounting Standard Board of ICAI for the current year 2022-2023. He is a co-chair of Corporate Affairs Committee of PhD Chambers. He has been a part of various study groups of Institute of Chartered Accountant to develop guidance notes, implementation guides, and other technical literature, including guidance note on CARO 2020. So list is still vast. So without wasting much more time, I again welcome to you, sir, and this 129th CP program. And request you to please deliberate on both these standards, SA 230 and SA 580. Over to you, sir, please.
Thank you very much for the kind introduction. And it is great to know that today is 129th CP program being organized by AASB. And I know being part of Auditing Standard Board that this year there have been number of seminars on auditing standards, industry specific programs, and which is definitely going to improve audit quality and enlighten the members in practice at large. So with this, I'd like to start the presentation. So is my screen visible, Anil?
Yes, sir. Yes, sir.
Okay, thank you. So today we are going to discuss two very important auditing standards, SA 230, which is on audit documentation, and SA 580, which is on written representations. So broadly, the contents of the presentation would be a background, then SA 230, and then SA 580. So this is a snapshot of the findings from the QRB Quality Review Board set up by Ministry of Corporate Affairs in connection with the reviews conducted during financial year 2020-21. So if we see 36% of the audit firms which were reviewed had non-compliances with regard to SQC1. After that, the most non-compliances in a majority of audit firms, 27%, was in relation to SA 230. 18% of the firms reviewed had observations related to SA 505, which talks about external confirmation, and 12% of the firms had issues related to SA 580 written representations. So if you see SA 230 is second most non-compliant or deficient procedures being performed in relation to this standard by the majority of audit firms. And then SA 580 also is comparatively higher non-compliances in terms of percentage of firms which have been reviewed by QRB. This is an extract from a very recent NFRA order, which has given a specific comment that failure on the part of the auditor to comply with a large number of standards in auditing while performing an audit of listed company. Audit conducted in a casual manner. The NAFRA noted non-compliance with 16 standards in auditing. Again, if we see from the same report, they have mentioned the list of 16 auditing standard and SA 580 features in one of the non-compliant standards in auditing. Again, screenshot from a NAFRA order. If we see the first line, the engagement partner was charged with non-compliance with SA 230 relating to audit documentation, in that he had failed to document the nature, timing, and extent of audit procedures performed and results thereof, failed to document audit evidence obtained, conclusions reached, communication with management and those charged with governance. He did not assemble the audit file within 60 days of signing of audit report, which is evident from the fact that he did not send the audit report and financial statements to NFRA along with the audit file on 3rd May 2022, but submitted them only on 10th May 2022 after NFRA advised him on 5th May 2022 to do so. Very specific pointed observation related to SA 230 and archival of files, which is dealt with SQC1. Again, another extract from another NAFRA order, which again states that the above submitted by CA, NFRA observed from the audit file that the audit has been conducted in disregard of all standards in auditing applicable to the said audit. So it's also mentioned specifically in the first line, NFRA also examined the audit file as defined in paragraph 6B of SA 230 audit documentation. So these have been some of the observations of NFRA, and QRP has also found deficiencies in SA 230 and SA 580. So we will be discussing the requirements of these standards and also look at some of the observations of Quality Review Board during the course of the presentation in respect of these two standards. So before we actually go into the SA 230 and SA 580, let us look at the legal and professional requirements with regard to the auditing standards. Section 143, subsection 9 of the Companies Act 2013 requires the auditor shall comply with the auditing standards. The word used is shall, meaning thereby it is mandatory on the auditor to comply with the auditing standards. So as far as audit of companies are concerned, auditor has been mandated by the Companies Act itself to ensure compliance with the auditing standards. Further, second schedule of the Chartered Accountants Act 1949 states that a member in practice shall be guilty of professional misconduct if he fails to invite attention to any material departure from the generally accepted procedure of audit. The generally accepted procedure of audit are generally defined in the standards in auditing. And if the auditor has failed to draw attention that a particular standard in auditing has not been materially complied with, the Chartered Accountants Act 1949 will come into effect and the member shall be guilty of professional misconduct. So with this background, let us first discuss SA 230 audit documentation. So the scope of SA 230, it is the auditor's responsibility to prepare audit documentation for an audit of financial statement, and the standard should be adapted to as necessary in the circumstances when applied to audits of other historical financial information. While the standard in auditing is in connection with the audit of financial statements, it provides that the auditor or the practicing chartered accountant can adapt the provisions of SA 230 as necessary when the audit of other financial information is being carried out, not necessarily financial statements. Further, it states the specific documentation requirements of other standards in auditing do not limit the application of this standard. So there are certain standards which require specific documentation requirements, which we will see what are the standards and what are the documentation requirements of those standards in the subsequent slide. What it says is those requirements will not affect the requirements of SA 230. They are only supplemental to the requirements of SA 230. Laws or regulations may establish additional documentation requirements. We look at some of the definitions that are given in SA 230. So the first definition, which is very important, is audit documentation. It is a record of audit procedures performed, including audit planning, relevant audit evidence obtained, and the conclusions the auditor reads. So if you look at, there are three parts. One, documentation of audit planning, then documentation of the audit procedures and the audit evidence that the auditor obtains, and finally, documenting how the auditor reaches a conclusion to support the audit opinion being issued. The terms such as working papers or work papers are sometimes used to refer to audit documentation. The next definition is of audit file. It defines the audit file as one or more folders or other storage media in physical or electronic form containing the records that comprise the audit documentation for a specific engagement. So it could be a hard copy file with the section dividers, defining different sections for planning for various line items of financial statements, or it could be on a Google Drive, or it could be on a computer folder, or a software that is being used specifically for documenting the audit procedures. So all that comprises the audit file. SA 230 also defines the term experienced auditor. An experienced auditor is an individual, whether internal or external to the firm, who has practical audit experience and a reasonable understanding of audit processes, standards in auditing and applicable legal and regulatory requirements, the business environment in which the entity operates, and the auditing and financial reporting issues relevant to the entity's industry. But this term experienced auditor is very important. We will see in the subsequent slide how the word experienced auditor has been used in the standard. So as we saw the definition, audit documentation is maintained at all three stages of audit work. That is audit planning, audit execution, and audit reporting. So we cannot say that we have not documented audit planning. However, we have done the audit and we have obtained adequate documentation to support the account balances. That will not suffice. You have to document what you have planned, the procedures that you have planned to perform, the risk assessment, materiality, all that goes into audit planning. Audit execution, of course, is important. And then you cannot say that we have not documented separately the basis of a conclusion to support the audit reporting. For example, evidences related to CARO reporting or IFC reporting. So it has to be done at all three stages of the audit work. Now, why is documentation important? An audit document supports our conclusions. It is required as per firm policies. So all firms need to have a policy. In any case, SQC1 requires certain policies to be framed, and these policies would guide the kind of documentation that the audit firm will maintain. Then there are applicable professional standards like SA 230 audit documentation issued by ICI and mandated in the Companies Act, which requires documentation to be maintained. Then there could be applicable regulatory and legal requirements, and audit documentation is evidence. We will see this in the subsequent slides, and also when we see the QRV findings, we will see how important documentation is. Documentation helps in internal reviews, whether the review is being carried out by the audit manager or the partner, or a cold review as required by SQC. Cold review is basically an internal review post completion of audit to see whether documentation meets the standards and any deficiencies that need correction. So SQC requires firms to have a procedure for cold reviews or internal peer reviews, whatever the term may be used. Regulator will definitely look at the documentation. As we saw in the background slide, there were specific observations on auditing standards and SA 230 and non-compliance behavior by SEBI board or Securities Exchange Board of India or any other regulator. Professional bodies, the Institute of Chartered Accountants of India conducts peer reviews. The scope of peer review has been significantly enhanced to cover more audit firms over a period of 4 years. And any company which is doing an audit of listed company is mandatorily required to have a peer review certificate issued by the Institute of Chartered Accountants of India. So audit documentation will facilitate the peer review. Then others, in case of litigation, you may need to produce audit evidence that then the documentation will only help you in proceeding in the litigation. As we can understand now, documentation is the backbone of an audit. The work that the auditor performs, the explanations given to the auditor, the conclusions arrived at, all are evidenced by documentation. So whatever you perform and whatever explanations you receive from the client during the course of your audit and how you reach the conclusion to support the audit opinion are all need to be documented to be available as audit evidence in case of any review or litigation. Inadequate or improper documentation may be considered as deficiency in performing an audit. We just saw observation of NFRA in a very recent NFRA order, where they have questioned that the audit firm failed to comply with the audit documentation requirements as per SA 230. The auditor may have executed appropriate audit procedures. However, if there is no documentation to prove, it may put question on the work done in case of any material misstatement is reported. So in many cases, the auditor may have performed all the necessary procedures, say, for example, obtaining balance confirmations from trade receivables, trade payables, or would have tested samples relating to purchases, or maybe have tested controls of the company. But in the absence of documentation, it will not be able to substantiate that it has actually performed those procedures. And obviously, there would be questions whether the work was actually done or not done. Improper and incomplete documentation may put the auditor in difficult situations, such as actions from various regulators. And as the members in practice would be aware, the regulatory environment regarding the quality of audit has been becoming very stringent over the last couple of years, particularly with reviews being conducted by NFRA. And most of the findings of NFRA are not being able to be substantiated by the auditors because of improper or incomplete documentation and not following the applicable standards in auditing. So these orders and show cause notices are available in public domain, and I would highly recommend to all members participating in this webinar to download these standards or these orders from the NAFRA website and have a look at how NAFRA has been, issuing orders, what they are actually looking for, and specifically related to documentation. So the purpose of documentation, it assists the audit team to plan and perform the audit. For example, when you do a risk assessment as per SA 315, understanding the entity and its environment, you will be documenting what are the risk areas where the auditor needs to focus more attention. What would be the audit procedures that will be performed? What would be the strategy, testing of controls, substantive procedures, substantive analytical procedures? All those are documented based on consideration of SA 315 and also materiality. And this will help the audit team to plan and perform the audit because they would have a documented audit program or the plan how to do the audit. Enables the audit team to be accountable for its work. Obviously, when the audit team documents what they have done, what conclusions they have reached, the relevant team member becomes accountable for the work, and the entire audit team is accountable because they have to actually sign off as preparer and sign off as reviewer. We will see the requirements. It assists in the supervision of the work and enables the quality control reviews and inspections. Obviously, when the work has been properly documented, the engagement partner and the engagement manager can supervise what has been done, what is the deficiency, what other procedures need to be performed, what is the evidence that has been obtained, and thereby enabling supervision of the work of the audit team. It also enables quality control reviews and inspections. So the quality control review may be by QRB or internal quality control reviews, or in case of listed companies, engagement quality control review, which is mandatory for listed entities. The second partner, whether internal or external, has to do a review before the audit report can be signed off. And inspections could be peer review or any other regulator. Without documentation, it would be difficult to substantiate the work done. Uh, Audit documentation supports and evidences work done and compliance with standards. These standards could be other auditing standards such as SA 505, obtaining external confirmations, using the work of experts, uh, participation at physical verification of inventory, or using the work of another auditor, or using the work of internal auditor, or compliance with accounting standards as applicable through the use of checklist and audit programs. Audit documentation also helps in documenting matters of continuing significance that can be retained for future audits. So you may come across a very important matter which would be relevant for future audits. Say, for example, a major contract that a company has entered into. So this can be used in future audits as well. In the absence of any documentation, it would be difficult, challenging to verify certain things or ask for the documentation on a every year's audit. So certain documents are retained for future audits as well. The objective to prepare documentation is that it provides sufficient and appropriate record of the basis for the auditor's report. Sufficient and appropriate, sufficient refers to quantity and appropriate refers to quality. So the documentation should be both meeting the quality and the quantity. So in case the uh, auditor work is not there may be multiple documents but they are not relevant, then it is not a good audit evidence. So it has to meet the test of both sufficiency and appropriateness, and evidence that the audit was planned and performed in accordance with auditing standards and applicable legal and regulatory requirements. So the auditor needs to comply with all the standards in auditing, right from appointment at formalities, issuing of engagement letter, risk assessment, determination of materiality, a response to the assessed risk of material misstatement, then audit execution, and in case of listed company, additional procedures that may be required to be followed. In case of banks or NBFCs, any other procedures that need to be performed, specifically performed. So the audit documentation has to provide evidence that all relevant requirements, including those of auditing standards, have been complied with and ensured. The form and content of documentation. This depends on various factors such as the size and complexity of the entity. Uh, in case of audit of a small and less complex entity, the documentation requirements would be less as compared to the audit of a very large corporation, and again a corporation with multiple locations, multiple branches, and various subsidiaries. So in case of consolidated financial statement, documentation would be more complex. The nature of the audit procedures to be performed, again, whether you plan to perform test of control, substantive procedures, or substantive article procedures, the documentation and the form and content would vary according to those. The identified risk of material statement and the significance of audit evidence obtained. So if the audit team has identified a significant number of risk of material misstatement, obviously the documentation to support the conclusions reached would have to be more extensive. Whereas if the audit team has concluded there are no risk of material misstatement, then the level of documentation would definitely be less. And the significance of the audit evidence obtained. So, what kind of audit evidence you're obtaining? So, for example, where you're assessing whether there is a material uncertainty relating to going concern, the documentation would have to be much more extensive as compared to probably other areas of the financial statement. The need to document a conclusion or the basis for a conclusion not readily determinable from the documentation of the work performed or audit evidence obtained. The audit methodology and tools used. So there are some audit firms which are using advanced audit tools or softwares where the documentation of items like determination of motility or sampling is done within the system once you upload a trial and to find some parameters, some motility can be calculated. So the documentation would obviously different from the firms who are using Excel sheets or other methods to determine motility or doing this assessment. So the audit methodology and tools would also affect the form and content of documentation. Now, it's the standard says the documentation should have sufficient evidence to allow an experienced auditor with no previous connection to the audit engagement to understand. So we saw the definition of experienced auditor when we discussed the definitions. So it says experienced auditor. Let me recap. Experienced auditor is an individual, whether internal or external to the firm, who has practical audit experience, and a reasonable understanding of audit process, auditing standards, and applicable legal requirements, the business environment in which the entity operates, and the auditing and financial reporting issues relevant to the entity's industry. So it says the documentation should have sufficient evidence to allow an experienced auditor with no previous connection to the audit engagement to understand the audit procedures performed, evidence obtained, significant matters that arose during the audit, conclusions reached, including significant professional judgments made, and who performed the work and when. So, to explain, suppose a quality review board assigns a technical reviewer to audit audit done by an audit firm. So that person who is an experienced auditor, he has not done the specific assignment of, let's say, ABC Limited, but he understands what audit is. He has experience in auditing. He has a sufficient knowledge about auditing standards and legal reporting requirements. That person, when reviewing the audit file done by the auditor who has been asked by the QRB to be reviewed, will be able to understand what audit procedures were performed by the audit firm, what evidence was obtained, what were the significant matters that arose during the audit, and how the auditor resolved and concluded those matters, including the significant professional judgments that were made by the audit firm, and evidence of who performed the work and when. So this is how the audit documentation should be maintained. So the term used was significant matters. So we'll have a look at what significant matters actually mean. Significant matters are matters which are judged through objective analysis of the facts and circumstances to be significant to audit and include, amongst others, significant risk. So when you do a risk assessment, you generally define whether it's a significant risk or a normal risk. So significant risks are generally significant matters. Based on the results of audit procedures, which indicate that there could be a material misstatement or would require revision or assessment of the risk. So you are performing some audit procedures, say for example, verifying legal and professional charges, and you come across a bill of a lawyer for a major litigation which you were not aware of. So this would necessarily require you to reassess the risk of material misstatement And this will definitely become a significant matter because as a result of audit procedures, you have to revise the risks. A, mat- a matter which would require which has involved a significant difficulty in performing necessary audit procedures, so it becomes a significant matter. So, for example, there could be verification of inventory at remote locations. So it may be a significant matter because there might be difficulty in performing necessary audit procedures as required by SA 501. Or you have concluded that there is a finding which could probably result in modification to the audit report, either a qualification or an adverse opinion or a disclaimer, or may require you to include an emphasis on matter. So these matters would become significant matters and need to be appropriately documented and concluded. Form and content of documentation. Documents are normally segregated into permanent audit file and current audit file. It is important to mention here that the SA 230 specifically does not mention about permanent audit file or current audit file. The implementation guide on SA 230, which has been issued by the Auditing and Assurance Standard Board of the ICI, has specifically given guidance on what is permanent audit file and what is current audit file. Uh, so a permanent audit file contains those documents, the use of which is not restricted to one time period and extends to subsequent audits also. So these are the documents which are not limited to audit of current financial year only, but they would be relevant for next year's audit or maybe a larger period. So some examples, memorandum of association and articles of association, or deed or bylaws and regulations in case of company, firm, cooperative society, engagement letter, communication with previous auditor, organizational structure of the client, list of directors, partners, trustees, bankers, and lawyers, a legal document such as prospectuses, leases, sales agreement, copies of special resolutions, etc. So these are certain documents which are normally not restricted to the year-end audit, but are relevant for many more years, unless amended. So, for example, a memorandum and association or an articles are amended, then the permanent audit file would need to be updated to include the latest memorandum and articles of association. So, current audit file contains those documents which are relevant for that time period of audit. Some examples include engagement letter, materiality calculation, selection of samples, list of directors, partners, trustees, bankers, lawyers, balance confirmations, working papers. You would have noticed the engagement letter is mentioned both in permanent audit file and current audit file. So let me clarify. In some cases, a master engagement letter is signed for 2 to 3 years. That goes into the permanent file, and only an addendum of changes in certain terms and conditions or fees is executed on a yearly basis. So a master engagement letter may be valid for 3-4 years, whereas some firms may prefer to have engagement letter on an annual basis. In that case, the audit letter, engagement letter goes into the current file. In the previous case, it goes into the permanent file, and any addendums there too goes into the current file as well as permanent audit file. So what to document? A very important question. The auditor needs to document the audit procedures applied, which would include objective, procedures, results, and conclusions, details of tests performed, which will include describe in detail the work performed. Say, for example, you are checking the borrowings. So, borrowings, what all procedures are performed need to be documented. This can be done through use of audit programs where there's a standard audit program listing out various procedures that need to be performed, and the audit team provides the comments against each question. However, it is important to mention that these are the tests that have been performed. Identify the person who performed the work and those who reviewed it, including the date when these were performed. Now, this is very important. Standard specifically requires, and there have been NAFRA observations regarding who performed the work, and the date when these were performed. So it is very critical that the person who has performed the work signs off as preparer, including the date and when the work was reviewed. Also mentions the name and sign off, and mention the date of review. In softwares which are being used by many firms now, there is electronic sign off from the person who has been using the system, so the sign off automatically comes. But it is important that the work done should be signed off, both the preparer and reviewer. Uh, it should document the significant matters that arose during the audit. We have already discussed what significant matters are. What were the conclusions reached and the basis for this conclusion? Source of the amounts and other information. So where the amounts have been traced to, say for example, in case of bank reconciliation, uh, the one amount would be traced to the trial balance and the other amount would be traced to direct bank confirmation received by the auditor. Properly index and cross-reference the file. So there should be a system of indexing and cross-referencing in the audit firm. So the index could be designed specifically by the audit firm to for various sections, like section for planning, for risk assessment, for share capital, for borrowings, for supervision, for subsequent events, for assessment of going concern. There could be multiple sections. The objective is that the file should be able to be, the auditor or any reviewer should be able to identify where to find the document. And if there are multiple documents, there has to be a cross reference. Audit procedures performed according to the instructions in the audit program. It is very important to have audit program, and the audit documentation should include what were the audit procedures performed as per the audit program. It should be ensured that all procedures mentioned in the audit program are addressed in the audit work papers. So normally firms do have audit programs for various areas. In case any particular procedure is not applicable but mentioned in the audit program, the audit team should document that such procedure is not applicable and why it is not applicable. Again, the auditor should document only the work that has actually been performed. Regulators are very smart to understand what work has actually been performed or not performed. So you should document only what the audit you have actually performed. Documentation should be only what is relevant to the audit. It can contain analysis, opinions, conclusions, and to support the overall audit opinion. Nature of documentation. This can be electronic, manual, or other media. Electronic would be use of softwares or audit tools. Manual would be printouts, and it could be a combination of electronic and manual. Some documents like agreements may be in only manual form, or other media such as audio tapes or CD. Examples include audit programs, emails with clients. That is very important. In one of the NFRA orders, it was mentioned that there was a lot of communication with the client through emails, but the auditor failed to provide the copies of those emails, and it was concluded by NFRA that the auditor has not performed adequate procedures. So there are a lot of information or explanation that are received over emails. So the auditor should either take a printout and file it in a hard copy, or convert into PDF and include in the electronic format if the auditor is maintaining electronic audit file, or if it could be saved, the email messages could be saved and stored on a separate media for easy retrievable. So that is very important. So emails with client are important communication, and wherever relevant should be appropriately documented in your audit file. Analysis, whatever analysis you have done, say maybe you have assessed the going concern issue. So there could be various analysis that you have done. Evidence of test of details and sample of items. So what is normally called as vouching. So whatever vouching you have done, you should have evidence of the samples that you have tested. Letters of confirmation and representation. So confirmations, again, SA 505 requires the auditor to obtain external confirmation and direct confirmations. Uh, so these confirmation letters should be part of the documentation. It is not. It should not be the case where the confirmations have been received over email and they have not been documented. Again, if confirmations have been received over email, then it should be PDF converted and filed in the file, or a printout be retained in the hard copy work papers. Abstract or copies of entities records. So there may be certain cases where the auditor would obtain abstracts or copies of entity record, for example, significant contracts or extract of board resolutions evidencing approval of managerial remuneration or enhancing the borrowing limits. So these are the documents which can be and which should be included in the audit file. Substantive analytical procedures, including development of expectations and investigation of differences. So when you perform substantive analytical procedures, you should document what was the basis for developing an expectation, what were the variances that you noticed, and how you investigated those variances and concluded that analytical procedures has provided an appropriate evidence to support the audit opinion. It is equally important to understand what is not documentation. So entity records, for example, invoices looked at in testing. So there is a practice of taking photocopies of hundreds of invoices which you have tested or vouched for. So these are not audit documentation. Whatever testing you have done, you have to document on a Word, Excel sheet, or on a paper that these were the samples selected. This is what I tested, and this is the conclusion reached. Copy of invoices has got no relevance in audit documentation. Superseded working papers or drafts. There are cases when there are multiple versions of a document. So probably you are preparing a file note for assessment of going concern. So there could be multiple versions as the audit evidence is obtained and facts change. There could be various options that are considered, and these should be destroyed, and only the final version should go into the audit file, because a superseded working paper may have certain information which is not relevant, but a regulator may take a different view and which is not desirable and not required at all. Notes that reflect incomplete or preliminary thinking. So a lot of time it happens when you are assessing the risk. Probably you have made some notes that this could be a potential risk, this could be a risk, but these have not been concluded upon, and therefore again these should be not forming part of audit documentation. For the same reasons, you may have noted something, it was a preliminary thought, but then as you discuss with the client, went through some papers, documents, discussions, you conclude that this is only a thought and this is not a true picture. But if you retain it in the audit file, there is a chance regulator may take a different view, which again would put the audit firm into trouble. Previous copies of documents corrected for typographical or other errors. Obviously, this is not required. They could be maybe a draft audit report which had a lot of typographical errors, which should not form part of the audit documentation. Only the final version should be part of the audit documentation. Duplicates of documents. No need to keep duplicates of documents, multiple copies. These are again not required. In case the audit team is uncertain whether to keep a particular document as audit documentation in the file, the audit team should consult the field senior or the manager or the audit partner who can guide whether it is to be documented or discarded. Examples where documentation is not required. SA 230 says that the documentation requirement applies only to requirements that are relevant in the circumstances. A requirement is not relevant only in the cases where, say for example, the entire auditing standard is not relevant. So for example, if an entity does not have an internal audit function, nothing in SA 610 revise is relevant, and hence there is no need to document or create a document regarding SA 610. The requirement is conditional and the condition does not exist. For example, the requirement to modify the auditor's opinion where there is an inability to obtain sufficient appropriate audit evidence, and there is no such inability. So SS 705 requires you to modify audit opinion when you are unable to obtain sufficient and appropriate audit evidence. However, you have been able to obtain sufficient appropriate evidence. So SS 705 will not come into play, and hence there is no requirement to document because there is a condition and that condition is not there. Documentation of small and less complex entities. Documentation in case of small and less complex entity is generally less extensive. Auditor may record various aspects of audit together in a single document. Examples could include understanding the entity and its internal control, the overall audit strategy, audit plan, and materiality. There could be a single document to document all these things. If, for example, you're auditing a very small company which has just been incorporated, there are hardly any transactions, only share capital is there. So the kind of documentation you make for a large audit company would be very extensive. It is not required in case of a small and less complex entity, this company, because there are no transactions. Probably there would be no risk of material misstatement because there is no revenue. The company has just been incorporated, no transactions, no business. So it can be documented in a single document also. So let us look at some of the characteristics of high quality work papers. So we have seen that documentation has to be made. There are a lot of things that are documented. There are things which are not documented. So in respect of the items which are documented or the work papers, what should be the characteristics of those work papers? So essentially, there are 5 characteristics of high quality work papers that all document preparers should consider throughout the audit process. Completeness. Each work paper should be completely self-standing and self-explanatory. So as we discussed, in case of a review and experience auditor, reviews the work paper, he should be able to understand what was done, how it was done, what conclusions were reached. So each work paper should be a speaking work paper in the sense that anybody reviewing should be able to understand what this work paper is talking about and concluding. Accuracy. High quality work papers include statements and computations that are accurate and technically correct. So probably you are working, making a working for India's 116 or 115. So these should be accurate and the computations that are here should be technically correct in accordance with India's 116 and accurately bring out the facts on the basis for calculation of India's 116. Organization. Work papers should have a logical system of numbering and a reader-friendly layout. So a technically competent person unfamiliar with the project could understand the purpose, procedures, perform, and results. This we discussed when we talked about experienced auditor. Important is logical system of numbering. So it should not be a haphazard file that in a box file you put all the papers, or in a computer folder you all the documents are there without any segregation of documents into various categories, or without numbering, without appropriately naming the file. So there should be a policy to even name the file in an appropriate manner. Lastly, relevance and conciseness. Audit work papers and items included in each work paper should be relevant to meeting the applicable audit objective. So it is very important. There could be large number of documents that are available, but if they are not relevant to meet the audit objective and they are not concise, then it does not serve any purpose. To give an example, you are checking borrowings and you have to verify the rate of interest and security. So entire loan agreement probably is required to be documented, but the audit team should highlight the portions that these are the conditions for securities for the disclosure needs to be given. This is the rate of interest. This is the principal amount borrowed. This is the repayment schedule. which is, and adequate referencing should be done, like for terms of repayment, refer page clause number so and so of the agreement. This makes the document more relevant and concise for the reader to understand when reviewing the borrowings. Otherwise, the reviewer will have to go through the entire document to find the relevant portion which is relevant for performing the review. Uh, this is an illustrative working paper which is been extracted from the implementation guide on SA 230, which has been issued by the Institute of Chartered Accountants of India by AASB. So it says, let us look at the elements. Uh, so it mentions the name of the company, XYZ Limited, which is the audit line, nature of assignment, whether it's an interim audit, a half-yearly audit, annual audit, the area which we are looking, whether it's you are doing the audit of corporate office, head office, or manufacturing plant. For the period, so it is for quarter ended December 31, 22, or year ended 31st March 23. Audit firm's name, ABC and associates, article assistant or any other assistant's name. So who has done this audit? So say Pranav Jain has performed, made this working paper. So Pranav Jain would come over here. Date of audit, yes. So let's say I'm doing this audit on 3rd of February. So date 3rd of February would come. Reviewed by, so let's say my partner Mr. X has reviewed. So reviewed by X, and date of review should also come. What is the area being reviewed? So I'm reviewing trade receivables. Some area may not be relevant. Balance as per balance sheet. So 1 lakh rupees, balance as per general 1 lakh, difference nil, reason for difference not applicable. What procedures I have performed on this? So I have performed balance confirmations and the subsequent realization of balances. So I will prepare the checking notes, observations. So maybe there are differences in balance confirmation obtained and the book balance. So the observations and then conclusion. So probably the conclusion would be reconciliation has been done properly. There was a timing difference. Check had been issued by the uh, trade receivable, but received by the company post 31st March. Hence, balance as per books and as per information is reconciled. So this could be a conclusion. So this is how a working paper should look like. This is an extract from the implementation guide. Uh, so there are certain standards which require specific documentation. So like SA 210, agreeing the terms of audit engagement. So what I have done is I have mentioned the standard and the paragraphs which require you to have specific documentation requirement as per those standards. So I have not reproduced. This can be referred either by the standard, and the implementation guide on SA 230 also contains a relevant extracts of the paragraphs which require specific documentation. So the participants can go through the implementation guide or the relevant essays. So broadly, the essays, SA 210 on terms of engagement, 220 quality control for an audit of financial statements, audit documentation, the entire standard itself talks about the documentation. SA 240, the auditor's responsibilities relating to fraud in an audit of financial statements. 250, the auditor's responsibilities relating to laws and regulations in an audit of financial statement. 260, revised communication with those charged with governance. 300, planning an audit of financial statements. 315, identifying and assessing the risk of material statement through understanding the entity and its environment. 320, materiality in planning and performing an audit. 330, auditors' responses to assess risk. 450, evaluation of misstatements. 540, accounting estimates. 550, related parties. 610, using the work of internal auditor. 701, communicating key audit matters. And 720, audit responsibility in relation to other information in this documents containing audited financial statements. Uh, these standards have specific documentation requirement. All these standards, in majority of the cases, the Auditing and Assurance Standard Board has also issued implementation guides And these are very useful implementation guide clarifying a lot of doubts. So members should go through these implementation guides as well. A very important portion of SQC1, which is relevant for audit documentation, is assembly of final audit file. SQC1 requires that the auditor should complete the administrative process of assembling the final audit file on a timely basis after the date of auditor's report. SQC1 requires firms to establish policies and procedures for the timely completion of the assembly of audit files. An appropriate time limit within which to complete the assembly of the final audit file is ordinarily not more than 60 days after the date of auditor's report. Now, there is no contradiction as such between the point number 2 and point number 3. SQC1 allows firms to establish policies and procedures for timely completion of the assembly audit files. SQC1 has prescribed the outer limit of 60 days. Audit firms may choose to have a shorter period within which to complete the assembly of the audit file and archive the same. So it cannot be beyond 60 days, but it can surely be less than 60 days. A reasonably shorter period is more advantageous because once you complete the audit, as the time goes by, there's a difficulty in the teams get split into various other audits, and you may have certain papers that you have to file, they get misplaced. So sooner the better. So the firm should establish policies which require completion of assembly in a shorter period, not wait for 60 days. Yes, legally it is 60 days. SQC1 required documentation to be preserved for 7 years. What is assembly of final audit file? The completion of the assembly of the final audit file after the date of auditor's report is an administrative process that does not involve the performance of new audit procedures or the drawing of new conclusions. So basically, what it says is that it is an administrative process only. You cannot perform any new audit procedure and you cannot draw any new conclusions because you have already issued an auditor's report. Changes may, however, be made to the audit documentation during the final assembly process if they are administrative in nature. So let us look at a few examples. Deleting or discarding superseded documentation. So as I mentioned, there could be some documents which are revised and old versions are also there. So discarding or deleting superseded documentation is purely an administrative process because the final document is already in the audit file. Sorting, collating, and cross-referencing the working paper. So maybe it has happened that you have obtained a lot of documents. So you are now just cross-referencing the work paper. So maybe you are putting reference of, just as mentioned, for borrowings. You are just mentioning the clause number and relevant paragraph number, page numbers. That is not a new document. You have already obtained loan agreement, verified the terms and conditions, reached the conclusion. So you are just cross-referencing the two documents, which is your loan work paper and the loan agreement. Signing on completion checks relating to the final assembly process. I have underlined the portion completion checklist relating to the file assembly process. So there are audit firms using checklists for documenting whether all the assembly process has been completed or not. So for example, that checklist may include that all email correspondences have been included, all superseded documents have been deleted, all papers have been cross-referenced. So this is a kind of a checklist which is only ensuring that the final assembly is complete. You can sign off on this checklist after the date of audit report, but you cannot sign off, for example, on a checklist for testing of borrowings or trade receivables, because that has been a part of your audit conclusion. So you cannot sign off any other checklist. You can sign off only completion checklist, which is related to file assembly process. So these checklists would be purely mentioning administrative items. implementation guide on SA 230, which has been recently revised by ICI AASB, contains guidance on the assembly of final audit file. What it has given various examples on what is administrative nature and what is not administrative nature. So I have just selected a few examples to elaborate the concept. I would recommend the participants to go through the various portions of the revised implementation guide on SA 230, the 2022 edition, and go through that and understand what is administrative and what is not administrative. Again, documenting audit evidence that the auditors obtained, discussed, and agreed with the relevant members of engagement team before the date of auditor's report. So there could be certain documents which you have to probably already discussed, agreed, and you are giving a final shape to the working paper. That is not new evidence. That is the administrative process. Ownership of audit file. Standard and Quality Control SQC1 issued by ICI provides that unless otherwise specified a law or regulation, audit documentation is the property of the auditor. So you are free to provide not provide access to client because these are your audit working papers. You have an option to provide access to certain working papers and certain conditions are met. So that guidance is also given in SQC1, but you may choose not to. Uh, Let us look at some of the QRB findings related to SA 230. Right. So these are the findings over last 2-3 years of QRB reports that are available in the public domain. So each year, Quality Review Board comes out with the publication highlighting the observations or deficiencies noted when the files selected by Quality Review Board are reviewed by the technical reviewers. So these include observations related to auditing standard, SQC, PARO, INDES, accounting standards, Schedule 3, and a lot of other laws and regulations. So these are some of the findings related to SA 230, which are available in public domain. Last 2-3 report issued by Quality Review Board. So I've summarized some of the major observation. Participants can download the report of QRB and go through the findings, not only of SA 230, but all other standards. And it will, help the audit firms to standardize the processes and plug the deficiencies they are having because uh, the regulatory environment is changing. And again, with audit quality maturity model becoming mandatory, there will be certain processes that would require to be implemented. So I'm just highlighting a few observations related to SA 230. So not preparing proper documentation, providing a sufficient and appropriate record of the basis for the auditor's report, not including checklists in the audit documentation for compliance with auditing standards, not recording in the audit documentation who performed the audit work and the date such work was completed, who reviewed the work, and the date and extent of such review. So we discussed this. So we have to document who did the work, when he did the work, who reviewed, the extent of review, and the date of review. Inadequate documentation of CARO report. So there are various clauses that have to be reported on, and it was noted that there was not sufficient documentation to support the reporting in GARO. Inadequate documentation for the audit procedures as required by SA 315, 320, 330, 500, 501, 520, 530, 620. So these were the standards which also require specific documentation. Some of these standards require specific documentation. Additionally, the work performed under those standards was not appropriately documented. So, for example, in SA 315, you have to identify the risk of material misstatement. You have to document the understanding the entity. You have to perform various other procedures. These were not documented. So 501 is a specific standard dealing with 3 items, but primarily physical verification of inventory. So these were not appropriately documented. Impairment assessment of property, plant, and equipment, intangible assets. So impairment assessment, where the conditions exist which may indicate impairment of assets. the auditor needs to document the basis for not recording a impairment provision or recording a provision for impairment, as the case may be. These have to be adequately documented. At least it should be documented that there are no conditions which indicate impairment, and make a work paper why the auditor has concluded uh, as such. Compliance of financial covenants imposed by the lenders. So there are a lot of covenants in the borrowing agreements. So there was no document to support the auditor has tested those financial covenants which are imposed by the lenders. Analysis and conclusion of contingent liability. So contingent liabilities need to be reviewed, and whether they're actually contingent liabilities or a provision needs to be recorded. So that analysis has to be done and a conclusion has to be reached. So this could be by way of various documents, including legal confirmation from lawyers handling those cases. So these were not appropriately documented. Uh, Next finding was going concern assessment, specifically evaluation of events and conditions triggering going concern and material uncertainty. So, going concern is a fundamental accounting assumption, and there is a specific auditing standard 570 on going concern. Uh, so, we have to do a going concern assessment, and especially with their events and conditions which trigger going concern issue. So, this was not appropriately documented. Implementation guide to 570 also includes a checklist on assessment of going concern indicators and the mitigation plan. So that can be used to document going concern matters. Inventories, again, no documentation to support assertions related to existence and valuation or physical verification sheets of inventory, inventory valuation sheets, and in case of financial assets, impairment assessment of trade receivables, intercorporate loans, investments, etc. Again, if we look at one of the NFRA orders, there has been a significant focus on impairment of intercorporate loans and advances and investments. So that again, that NFRA order is in public domain. Uh, NAFRA has focused a lot and highlighted a lot of non-compliances and deviations, and that the auditor failed to perform adequate procedures to assess impairment of financial assets. So again, I would advise to go through some of the NAFRA orders to see what NAFRA is looking at and prepare ourselves adequately. External confirmation from banks, financial institutions, vendors, customers, etc. So again, there was an overlap of SA 230 and SA 505. So this observation in 1 year was given under SA 505, and in 1 year it was given in SA 230. So it is relevant in both cases. So SA 505 requires you to obtain direct confirmation, external confirmation from banks and others. So this was not taken, and hence requirement of SA 230 was also not met. Documentation with respect to internal controls with reference to financial statements, that is process notes, risk control matrices, and selection and testing of controls. Observing with reference to assembly and retention of audit file. The audit evidences collected, obtained, were kept on record without linking it to any audit program or account balance. So as I mentioned, there could be a case, where you have a box file and you put all the documents, and there is no reference, no linkage, nothing, no reference to any audit work done, audit program, or neither it is indexed. So these were the actual findings based on our QRB review. Documents provided by the client and documents generated prepared by the audit team were not adequately segregated and filed. So they obtained a lot of schedules prepared by the entity, and and then you perform your audit procedures and work on those schedules. So there were cases where there was no demarcation whether the schedule was prepared by the entity or it was a audit work paper. So as such, whenever you include entity prepared schedule, you should mention prepared by entity or prepared by client and document it as such, because it is, though a documentation, it is not an audit working paper. Inadequate documentation for discussions of significant matters with management or those charged with governance. Again, this is overlapping between SA 260 and SA 230. It was covered in both auditing standards. SA 260 is also an area of focus in NAFTA findings. So that again has to be taken care of very sincerely. In any case, if we look at the format of audit report, we specifically mention we communicate with those charged with governance. Now, again, whatever you are stating in audit report has to be documented. So both SA 230 and SA 260 were not complied with. Delayed assembly of final audit file after date of orders report. So it was archived beyond 60 days. Again, NAFRA has also pointed out the same resolution which we saw when we were discussing the background of today's webinar. So key takeaways, this is a screenshot which I have taken from the QRB report. Quick go through. Prepare audit documentation on a timely basis during recording, who performed and reviewed audit work, and the dates of completion and review. Prepare documentation to understand nature, timing, and extent of audit procedures performed to comply with standards of auditing and applicable legal and regulatory requirements. Results of audit procedures performed and audit evidence obtained, and significant matters arising during the audit, conclusions reached, and significant professional judgments made. Comply with the policies and procedures for assembly and archival of work papers within stipulated time. So these, again, a screenshot I have taken from the QRB report for 2020-21. Now, let us look at guidance to the auditors in connection with SA 230 and others. Uh, So ICAI issued a practitioner's guide on audit of small entities, which is revised 2020 edition. Ready reference on engagement and quality control standards. So these guides have given a simplified overview of the standards and also included various checklists to comply with the auditing standards, and particularly the practitioner's guide on audit of small entities. That would be very helpful because they have prepared a checklist which covers only relevant portions which may be relevant for an audit of small entity. Again, implementation guide on SA 230, which has been recently revised 2022 edition. There are MCQs on engagement and quality control standards. And lastly, Western India Regional Council of ICA has issued an Excel format of checklist on standards and auditing. So if you go to the website of WIRC of ICI, you can download that checklist. Or even if you Google checklist and standard auditing by WIRC, you will directly go to that link. So these are some of the tools not related to SA 230, but overall compliance with standards on auditing that will help the practicing units to comply with the SA 230 and other standards. Uh, to sum up the standard, a very important key message: work not documented is work not done. So even if you have performed all the procedures, if you are not documented, it is assumed that you have not done anything. This is how I would sum up SA 230. We will go to SA 580 written representations. So as we notice in the background, non-compliances noted by NFRA, SA 580 was also one of the standards where NAFRA had actually pointed out non-compliant with SA 580. Quality Review Board has also mentioned certain deviations and non-compliances with the requirements of SA 580. I have compiled a few observations from QRB reports at the end of this presentation related to SA 580. The standard apparently seems simple, but there are some key points which need to be taken into account by the auditor when performing an audit and obtaining written representations. So let's begin with the definition. Written representation is a written statement by management provided to the auditor to confirm certain matters or to support other audit evidence. Written representations in this context do not include financial statements, the assertions therein, or supporting books and records, which is a separate written statement which the management provides to the auditor to confirm certain matters or to support other audit evidence. Objectives of the audit: to obtain written representation from management and, where appropriate, those charged with governance, that they believe that they have fulfilled their responsibility for the preparation of the financial statements and for the completeness of the information provided to the auditor. To support other audit evidence. So I have highlighted and underlined the word support other audit evidence. We will look at the significance of these words in a subsequent slide. Support and other audit evidence relevant to the financial statements or specific assertions in the financial statements by means of written representations, if determined necessary by the auditor or required by other auditing standards. So there are other auditing standards which require specific representation. We will have a look at those also. To respond appropriately to written representations provided by management and, where appropriate, those charged with governance, or if management or where appropriate, those charged with governance do not provide the written representations requested by the auditor. So broadly, SA 580 would cover all these aspects. So we'll have a look at all these aspects briefly in the next few slides. So although written representations provide necessary audit evidence, they do not provide sufficient appropriate audit evidence on their own about any of the matters with which they deal. So for example, if you are testing trade receivables and you take a representation from the management that all trade receivables are fully recoverable and no provision is required against such balances, this is not an audit evidence to support your opinion regarding the various assertions related to trade receivables. You will necessarily need to perform audit procedures such as balance confirmations or subsequent realization from trade receivables or uh, invoice testing for whether the goods were actually dispatched and delivered. So these are the audit procedures that you would have to perform in addition to aging analysis, correspondences, whatever procedures that SA general audit procedures require. And SA 505 has also given some examples of alternate procedures to be performed in case of non-receipt of balance confirmation. If you have not been able to perform any of these procedures because of various reasons, because confirmations have not been received, you are signing a balance sheet very close to the year end, and so there is not sufficient subsequent period, or whatever reasons, you cannot issue a unmodified opinion solely based on a representation letter. You will have to either perform certain procedures, maybe do a testing of interim period and see whether data are moving or not moving. And if you're not able to do anything, you will have to invoke SA 705 regarding modifications to audit opinion. Written representations are not to be used as a substitute for performing other audit procedures. This I have explained by way of an example, or as the sole source of evidence of significant audit matters. So again, broadly, we have discussed trade receivables example. So, it cannot be a substitute for other audit procedures that we have to perform, and it cannot be the sole source of evidence on significant audit matters. The reliable written representation do not affect the nature or extent of other audit evidence about the fulfillment of management responsibilities or about specific assertion. This means that even though you have concluded that representations are reliable, this will not affect the nature or extent of other audit evidence that you need to obtain to ascertain that the management has fulfilled responsibilities, or about specific assertions that, just to take the example of trade receivable, written representations reliable that trade receivables are fully recoverable, but that will not affect the specific procedures you have to perform assertions like valuation of trade receivables. Uh, Written representations are requested from those responsible for the preparation and presentation of financial statements and knowledge of the matters concerned. Those individuals may vary on the governance structure of the entity and relevant law or regulation. However, management, rather than those charged with governance, is often the responsible party. Written representations may therefore be requested from the entity's CEO or CFO or other equivalent person in entities that do not use such titles. Key written representations, management to provide a written presentation that it has fulfilled its responsibility for the preparation of the financial statements in accordance with the applicable financial reporting framework, including where relevant a fair presentation as set out in the terms of the audit engagement. So if we go to SA 210, there there is adequate guidance on what is the responsibility of management, which has to be included in the engagement letter. So this requirement of the standards is that management has to confirm that they have fulfilled their responsibility as they had set out in the terms of audit engagement. So it is very important that the audit engagement is also appropriately drafted and obtained, particularly with regard to audit responsibility and management responsibility and certain mandatory requirements as prescribed in SA 210. Management should provide a representation that it has provided the auditor with all relevant information and access as agreed in the terms of the audit engagement. Again, it's linking back to SA 210. All transactions have been recorded and are reflected in the financial statements. Other essays require auditor to request it. So management, you have to request management to give a written presentation on matters which other auditing standards require you to obtain. Uh, the auditor may determine that it is necessary to obtain one or more written representations to support other audit evidence relevant to the financial statements or one or more specific assertions in the financial statement. In such case, the auditor shall request such other written representation. Some of the examples are whether the selection and application of accounting policies are appropriate, whether the matters such as the following were relevant under applicable financial reporting framework have been recognized, measured, presented, or disclosed in accordance with that framework, such as plans or intentions that may affect the carrying value or classification of assets and liabilities both actual and contingent, title to or control over assets, the lines or encumbrances on assets and assets placed as collateral, and aspects of laws, regulations, and contractual agreements that may affect the financial statements, including non-compliance. SA 450, evaluation of misstatements identified during audit. This requires the auditor shall request a written representation from management and where appropriate, those charged with governance, whether they believe the effects of uncorrected misstatements are immaterial individually and in aggregate to the financial statements as a whole. So, as per SA 450 and read with standard and materiality, you identified in the course of audit certain misstatements, right? Obviously, misstatements below a threshold, which is normally known as clearly trivial, are ignored. Other than those, you accumulate them, and if they reach the materiality level, you have to modify your opinion. But whatever you are not recording as adjustment, you have to accumulate and ask the management to confirm whether they believe the effect of these uncorrected misstatements are immaterial, both individually and in aggregate to the financial statement as a whole, and a summary of such items shall be included in or attached to the written representation. Whatever unrecorded misstatements that you have identified and which, as per the your firm's policy and auditing standards, are immaterial, these need to be reconfirmed by the management through a representation letter either by including those amounts within the main body of the representation letter or as an annexure. This again has been a common miss in case of many regulatory reviews done by QRB. They have noted that these things had not been covered in the representation letter, so it was covered in the non-compliance of SA 450 rather than 580 in the QRB report. Date of and period covered. The date of written representation shall be as near as practicable to, but not after the date of auditor's report on the financial statements. So, as we saw, written representations are an audit evidence, though not a sufficient appropriate audit evidence, but it is an audit evidence. And you cannot obtain any audit evidence after the date of audit report. So your audit report cannot precede the date of presentation letter, right? So in SA 230 also, when we were discussing assembly of file, we noticed that only administrative changes can be done. So obtaining a representation letter dated after the audit report would amount to obtaining a new audit evidence after audit report, and hence this cannot be the case. So representation letter has to be either on the date of the audit report or uh, prior to that as near as practicable. Also, uh, representation letters would normally consider facts such as the subsequent events, and the auditor, as per the auditing standard 560, is required to consider subsequent events up to the date of auditor's report. So again, it is important that representation letter is as close to the audit report, but definitely not after the date of auditor's report. This I explained. Again, this I explained that audit is concerned with events occurring up to the date of auditor's report that may require adjustment to or the financial. The representation are dated as near as practicable to, but not after the date of the auditor's report on the financial statement. The written representation shall be for all the financial statements and periods referred in the auditor's report. So other considerations regarding written representation. Written representation shall be in the form of a representation letter addressed to the auditor. SA 260 revised, which relates to communication with those charged with governance, requires that the auditor should communicate with those charged with governance the written representations which the auditor has requested from the management. Again, compliance with SA 260 is one of the focus areas of regulators these days. Particularly, NFRA is focusing on this area. Some very important points regarding written representation. If a representation by management is contradicted by other evidence, the auditor shall reconsider the assessment of the competence, integrity, ethical values, or diligence of management, or its commitment to or enforcement of these. So, if management has given you a certain written representation which is contradicted by other audit evidence, the auditor should perform these. The auditor should investigate the circumstances and, when necessary, reconsider the reliability of other representations made by the management. So, if one representation has been contradicted by other audit evidence, again, the auditor should investigate the circumstances and, where necessary, reconsider the reliability of other representations also made by the management. The auditor should consider whether his reliance on management representations related to other aspects of the financial statements is appropriate and justified. The auditor may consider whether risk assessment remains appropriate, and if not, revise the risk assessment and determine the nature, timing, and extent of further audit procedures to respond to the assessed risk. So, where you have taken a representation during the course of audit and you have another audit evidence which contradicts the representation made by the management, a lot of things are triggered. We have to ensure these. and again revise the risk assessment. Maybe this false representation is not a session level risk, it becomes an entity level risk and have to be appropriately dealt with. So you have to reassess the entire audit strategy, methodology, probably. So depend on circumstances, but this will definitely be triggered and need to be documented, uh, how you have concluded, what you have concluded. Now it says, standard says, further says, if the auditors has concerns about a competence, so you have to when there is a contradiction, you assess. Now you have concluded, right, or reasonably concluded that there are concerns about the competence, integrity, ethical values, or diligence of management, or about its commitment to or enforcement of these. The auditor shall determine the effect that such concerns may have on the reliability of representation and audit evidence in general. It may cause the auditor to conclude that the risk of management misrepresentation in the financial statement is such that an audit cannot be conducted. In such a case, the standard says the auditor may consider, where possible, withdrawing from the engagement unless those charged with governance put in place appropriate corrective measures. However, the standard further goes on to say that such measures, however, may not be sufficient to enable the auditor to issue an unmodified opinion. So it says you may consider withdrawing from the engagement unless those charged with governance put in place appropriate corrective measures. However, it is despite those corrective measures, auditor may not be able to issue an unmodified opinion. Now, where the auditor may not be able to withdraw, say for example, there are SEBI guidelines regarding resignation by auditors in case of listed companies. There are restrictions within what time period you can resign or you cannot resign. So, for example, if you've done 3 quarters, you necessarily have to do the annual audit before you can resign. So, in these cases, auditor is unable to withdraw from the engagement and then has to redesign the audit procedures and assess the impact on the audit report. So there may be cases where the management refuses to furnish written representations. So SA 580 provides certain guidance on that. SA 580 says that this constitutes a limitation on the scope of the audit uh, and is sufficient to preclude an unqualified opinion and is ordinarily sufficient to cause an auditor to disclaim an opinion or withdraw from the engagement. If the auditor concludes that the written representations are not reliable, the auditor shall take appropriate actions, including determining the possible effect on the opinion in the auditor's report in accordance with SA 705. So SA 705 deals with modification to audit report and not emphasis the matter. Emphasis the matter is dealt by 706. So in case the auditor has concluded representations are not reliable, it has to consider the impact as per SA 705. Now, there could be a situation, and this is quite often a practical situation, where the current management was not present during all the periods referred to in the auditor's report. So, maybe, for example, the entire management changed mid-year, right? Now, in some circumstances, such management may assert that we are not in a position to provide some or all of the written representations because they were not in place during the relevant periods. However, the SA 580 clearly states that this does not diminish such person's responsibility for financial statement as a whole, because the management, as on the date of the signing of financial statement, is responsible for the preparation of financial statement and true and fair view. Therefore, the standard says the auditor should insist and request from the current management written representations that cover the whole of the relevant period covered by the audit report. So, just because the present management was not there the entire period under audit cannot be an excuse to not provide representation letter and audit. If still the management does not provide, then you go back to the previous slide where it says if the management fails to provide representation, then you perform certain procedures. Right. Some of the QRB findings related to SA 580. The auditors have missed to obtain the written representation from management on matters like the management's responsibility for the design, implementation, and maintenance of internal control to prevent and detect fraud, completeness of transactions and information provided, related party relationships and transactions with them, appropriateness of assumptions used in significant estimates, dating of MRL or management representation letter, or some people call it letter representation, closer to the date of audit report. And MRL has to be taken on record by the audit committee board of directors. So these were some of the non-compliances noted with respect to SA 580. And as we mentioned, around 12% of the total forms that were reviewed had observation related to SA 580 when we saw the snapshot of QRB findings related to standard and auditing. So this is from my side. I think we have some time for question and answers.
Thank you so much, sir, for such a detailed and wonderful deliberation. You have covered
Hmm.
all the aspects of both these standards, sir.
Okay.
Sir, due to the technical glitch, we are not in a position to fetch the questions. But at the initial stage, I have received two questions, which I am going to ask from you, sir. And in the
Yeah,
time to come, if I'll receive the question, then I'll mail you those questions, sir.
sure.
Sir, first question is one member is asking how many years we have to keep the documents for this documentation.
So it is 7 years from the date of auditor's report.
7 years. Okay,
Yeah.
sir. So, how to obtain the audit evidence? Like email communications done by insurance company, as sometimes they say these are the internal confidential and therefore cannot be shared with the auditors.
So on a case-to-case basis, the auditor will need to assess whether the information not being provided will have an effect on the audit opinion, because you should not hide anything from the auditor, because if you're hiding something, then the auditor will need to again reassess the risk of material misstatement as per 315, because the perception of audit has changed about the management, right? It may cause the auditor to believe that there are other areas where the management will not be sharing information. And then again, it has to assess how confidential it is. And even in confidential, I understand you may not share the copy, but they can definitely show, an auditor can make a noting of the relevant points. So this is a normal practice, where there are certain like contract with ND, or certain confidential document which they do not give you copy for retention in document, but they show a senior audit team member, and that they can make notings of certain things. So this is how the auditor has to address. And if they're not showing also, then reassess the risk and effect of reliability of other audit evidence also.
Sir, is audit document made by the document on supporting by clients amount to audit document for filing purpose also?
So I'm not clear about the question.
Is audit document made by the document on supporting by clients amount to audit document for filing purpose also?
Filing in the audit file.
Yes, sir.
So, what I understand is, you probably are referring to some copy of the agreement or some voucher, and you have made some notings on that voucher itself, right?
Yes, sir.
So that is, as such, not a proper audit documentation, because that is only a copy of invoice, and you have made okay, verified, ticked, checked. This will not actually serve any purpose of documentation. But I also mentioned, copies of invoices is not audit documentation. I have seen, people taking copies of all the fixed asset purchased during the year. That is, I mean, like any reviewer will not be able to see what you have actually checked or not checked, or just obtained copies and filed. So, it has to be properly documented what was checked, by who it was checked, whether you checked the correct description of the asset from the purchase order, bill, and amount, quantity, these things. So this is what has to be done actually.
Yes, sir. And sir, sometimes during the COVID time period, or still somewhere, some organizations work from home is still going on for out of 5 days, still 2 days or 3 days work from home is going on. So some approvals are there which are on, maybe today WhatsApp is very popular to take the permission, and everyone is on group and take the permission on the WhatsApp. So how we document this type of approvals which are on the only on WhatsApp and not on paper?
Um, so this will have actually an impact on your testing of internal financial controls as well, because uh, I mean, like if you can use a WhatsApp, you can use an email also. How an auditor can document WhatsApp? That will be very
Yes,
difficult.
yes,
So I don't think that would allow the auditor to issue an unmodified opinion, at least on internal financial controls. Again, you'll have
yes,
to assess the pervasiveness of such thing. A materiality, maybe one or two cases, exceptional cases, but then these should be, reconfirmed by the auditor through a formal document, maybe that this was actually approved by us, because number also may change. There are people who are having multiple phone numbers, right? So how do you verify
yes,
that WhatsApp used was the relevant persons only? So this is not, I think, a good audit evidence. We have to
yes, yes.
work around it.
And sir, what about the if any audit evidence is sent by through mail? So is the hard copy is also required after some time, or that mail evidence is sufficient on hard copy is not required that time?
So one very important thing in email communication is that it should come from an official email ID.
Suppose in case of banks, suppose in case of banks, if one balance confirmation is there, it is given by the this through email. So then after that, hard copy signed by the bank official is also required, sir.
So two things. One, when the auditor is sending the confirmation directly or not, right? That is very important. Then the email ID should be of the bank. It should not be Hotmail or Gmail ID that the mail is sending to. And why I'm saying the auditor should send directly, because if that email ID is incorrect, it will bounce and come to the knowledge of the auditor. Whereas if the client sends the copy to the auditor, if the mail bounces, the auditor will never know. Next, it should be an official email ID. And in some cases, yes, this can be treated as a reliable evidence, because now there are softwares also which are facilitating, balance confirmations. There are software available in the market. So that is good as long as certain precautions are taken care of. But banks
Yes,
normally are sending, my experience is banks are not just confirming on the email, they are sending a scanned, signed, stamped letter as attachment along with the
yes,
mail. So that should be
yes, yes,
sufficient,
yes,
provided comes from the official ID of the bank.
yes, sir. Sir, one member is asking, can you just put throw and at a gist, so while making the, however you have covered in your presentation, what precautions we are auditor can take in mind while audit documentation in a gist manner only, major four point points.
So one, yeah, it should be done parallelly. You cannot say, "Ki, I will test now and document later." Uh, that is very important, because whatever you obtain now, that is fresh in your memory and you can easily document. Number two, you should go for quality of evidence rather than quantity. There may be 10 emails, but they may not be relevant. One legal document, maybe a signed confirmation for the lawyer, is more reliable than 10 emails, internal emails between the CFO and the legal head. So that is one. Number three, it should be cross-referenced, and balances should be properly identified. That is very critical. And if there are differences, how they have been disposed of, that should be very critical. And there should be evidence who prepared and who reviewed. That is very. And lastly, the audit programs and checklists that the firm has developed, and or also, Institute has also provided so many checklists, auditing standard, accounting standards. These should be properly completed to ensure that And these should not be yes, no, it should be properly documented with evidence. So I think these are some of the points, which will facilitate audit documentation. And I would highly recommend to, download last 2, 3 years QRB reports and see what deficiencies they have pointed out. There, some of them are common observations. So, if you correct those also, you are able to meet the requirements of the standard. Uh, is this fine? Yes. आनंद जी आपका आवाज नहीं आ रहा.
Sir, can you hear me, sir?
Yeah, I can hear you.
So now we have come to an end, sir. Thank you so much for
Right.
being here on 129 CP program organized by WSP of ICI. On behalf of WSP of ICI, I extend my heartiest thanks towards you, sir, for
Thank you.
sparing your valuable time as well as acceding to our request on a very shorter notice. Thank you so much, sir.
Thank you. My pleasure. Thank you very much.
Thank you, sir.
And thank
Thank
you
you,
all the
sir.
participants.
Thank you, sir. Thank you, sir.
Thank you. Thank you.